Guys, so yeah, the last time we were talking on how to trade or buys using the standard error bands. So the standard error bands are simplified for you. I'd given out the standard error bands that we are going to use, guys, and so we can now proceed to check on how you can now sell. So last time we were learning how to buy, today we'll be learning how to sell. So we can start off. So the selling structure. So first of all, we'll have to understand by having a selling structure. So I told you last time we were talking about trading reversals, right? Trading reversals. So trading reversals using the standard error band strategy. So how to trade reversal. So this time we want to learn how to trade sells, because in the last video we were learning how to trade buys. So this time we're going to learn how to sell. So selling, you know very well, I told you, if for you to sell a price, or for you to trade a sell reversal, how do you trade a sell reversal? Trading a sell reversal will require you to find what? To find the market. You have to find the market when it's on buys, guys. You have to find the market when it's on what? Find the market buying, right? So when you find the market buying, then now you'll have to anticipate what? You just have to follow up. You follow up with that buy, follow up with the buy, track the buy until when the buy comes to an end. So after following the buy, then you'll have to do what? Then I will after ending of buys, then you'll do what now? After ending of buys, you will sell. You will sell, guys. So just a minute, you will sell the price. So now we are going to check and maybe find the truth in that statement that I've just put out. So for us to I've said for us to sell, we have to find the price when it's buying. And because you remember in the last video I told you, if you want to buy, you're supposed to find the price when it's selling. So this time it's just the vice versa. So without wasting time, let's just go and find or we can just first of all draw a structure, and then we can go use that structure in finding the setups in the chart. So we'll put use the path. We use the path. So using the path, for example, using the path, you'll allow me first of all to, and then now we have a clean chart. So what I'm going to do is, we've said you have to find the price when it's buying. So the price will have to be in such a manner, forming a series of higher highs and higher lows. So higher low there, we have a higher high and then a higher low. So we are just following, we're waiting until when that trend comes to an end, because immediately that trend comes to an end, the price will switch. So switching means if it was buying, then it will do what? It will sell. So that's why you get your sells. So let me show you now. So forming a series of high highs and high lows, then all of a sudden that trend is cut short by a reversal. So this is how a reversal looks like. The price will just form a high low like that, and many people will just be expecting it's a high low. Then it will just open some small buys or little buys, and then all of a sudden there will be a drop in price, right? So when price drops like that, I told you what, this is not this will not be considered as no, I mean, this one will not be considered as a higher high anymore, but it will be a higher low, because you see price has done what? Price has taken out, price has done by taking out this level. You see this level so this one will not be a higher low, this one will not be a higher low, but it will be turned out to be a lower low, right? This one will be a lower low now. So the price will take it out. So after taking out that lower low, of course there will be a retest there. You'll see now price starting to retest. So how do you now get your sales? So sales are taken on those retests you're seeing there. So price takes a lower high out. For example, this higher low is taken out. So after being taken out by the price has to do what? Has to do a reversal there, and then now to open more sales. So in short, reversals, it is when the trend comes to an end. So this buy trend coming to an end, so we start doing what? Anticipating sales that we, for example, the sales that I'm talking about, sales how we are having on this other side here. So let's go find these setups in the chart, and then you guys can understand using the standard error bands. Now I'll teach you with the standard error bands after we continue. So for example, let's go find, for example, a sell. Let's see. For example, you're seeing, let's not even just go far. We're having a sell here. We're just having a fresh sell that came to an end after some time. This sell came to an end. You see this sell? Maybe it has come to an end because you see now the price is doing what the price is buying. But we can try to learn from this sell and understand how we could catch that trend, right? How we could catch that trend there. So I've told you, since the market is selling, or we've got the price selling, it doesn't mean it was just selling all time. No, there was a time it was buying, and then now it reversed from that buy, starting to do what, to giving us now to giving us sales. So let's take a look, and just so we'll have to find those buys where those buys were, and then we'll mark the high lows out, and then now we wait for the retest on the price. So after the price retest those high lows, we'll start opening our entries and taking our position. So how do we go about? Let me just show you. So in easy terms, or you can in the 4 hours time frame, or you can go to a 1 hour time frame, like that, so that the charts gets enlarged more, and you get to see those high lows very well, and you can now make your decision. So where's the sell we're talking about? So this arrow is pointing where we wanted to analyze the cells. So I'm teaching you how you could catch these cells, and yeah, how you can catch these cells. So let me go show you. So let's continue now. So this, it means price was buying initially before you see these cells. So we'll have to find those buys. And where are those buys? I told you these are the buys. You see the buys here? Just let me mark the buys. These are the buys here. You see the buys happening there? Those are the buys. So mark your high lows out. Mark your high lows out on that, on your higher, on your mean, on your high, on this buy trend you're seeing here. Carefully mark your high low. So what is a high low? So we'll see. So for example, this one, first of all, this one okay, we'll see. So this one is not a high low. This one is not a high low because you see price went below this, price went below here. So we'll not start, I will start looking at this particular point. So let's first of all, okay, this one, you see there's okay, here there's no high low because there's no high low here because price never went up. It just came close to getting, but the price never went up. So no high low here. So let's try to look at this particular point. Okay, there's a problem also with this point here. So the market starts to give high lows from there. You see, clean high lows. There's a reason I've not taken this one, because you see this bullish candle went below this bearish. So that tells us that it's not a good, that is a weak high low, which might not help us. So we're just marking out the strong lows. So let me show you again another strong low. Okay, let's take a look at this point here. Yeah, so we have a low here also, a strong one. This one is a strong low, like that. So after we mark a second low, just continue going up. This low will help us in a very short time, in the coming time. So another one, let's see this bearish candle. This one not consider because you see it went again below this one. So no, this one is not a strong low, leave alone that one. So we're only marking the strong lows where we expect price to react aggressively. So another one, let's see this one. Yeah, this one we can say, yeah, this one is a strong low, like this one. That is a strong low, you see. So again, another one, let me show you another one. So this one is not a strong low because why did price went below here? So there was a lot of manipulation here. But this one, again, this one I agree with it, that can be a strong low also, mark like that. So guys, just watch, I'm following up how I'm taking my lows, and they'll be very helpful in making you understanding how to trade those cells. So let's see here. Yeah, so here we have another strong low. This one you can say is a strong low here, but the second one leave alone. This one leave alone. This one leave alone. There's no any low there because price went below. So also this bullish candle, we cannot mark any high low there, so leave alone. And then let's see here. So here what we can say, we can take this one. See this one here, we can take that one there, can take that one. And then we're just about to complete that the buys. So we are trying to use those buys to find our sells. So here we'll also consider yeah, like that. And then now we're just about to complete about the high lows. So let's see below here. Yeah, so here now is okay, that down here is okay. You see this one, because you see this candle, we can mark this one. We cannot use this one as the high lows because why did it went below this one here? So don't mark there, you only require to mark that end there. So after marking, now you see we've come to an end because we don't see any further high low here. The price now started to take reversals. So why do you pay attention? You see the mark levels we've marked, you start paying attention after the price breaks them out. And what happens to them? Retest. Then we have the price retesting at them. So and then we can open what? We'll be looking forward to open sales. So let's see where did the retest happen. The first retest, you see this high low is taken out, and then now after being taken out, you see there was the price. What happened to the price? Let me show you. There was a breakout, but no retest happened. You know, retest must be a series of candles, bullish candles, not just one candle. There was no retest. You cannot say that this one is a retest here. You cannot say that this one is a retest unless you're scalping. But when you're scalping, you'll be risking. But wait just for a good retest. So for example, like that, price went there, and then now you see price came back there, because price will never go without retesting a particular area that it was supposed to retest. So let's see again the second. You see again the second you see this is the second higher low. This is the second higher low. It was taken out by the price, but no retest happened. The price just kept on going down. Even the third one also the same happened. Also the fourth one, it was still taken out, but the fifth one never the fifth high low was not taken out. So price had to retest all of them. You see, all of the lows were retested by the price, and then up to the final low. So after retesting the final low, because there was no any other here, in the case there was any other, price could have gone up to there. But now since this was the last, price had to reach there, because this was the last high low. So price had to reach here, and then now after going there, price, now look what happened. The price just dropped very nicely. So you see, after dropping nicely, so you could wait. First of all, what could you wait for? You could wait for the price. You could now, maybe after the price retesting here and giving you more confirmation, you could now start looking for your entries here, or you could wait. No, yeah, you could start looking for your entries here. So let me show you how you could go about. Just a minute. Like that, let me show you now. So the price retested all the lows. The price retested after taking them out, all of them were retested. You see, it got retested here, second time retested, third time there was a retest, and also there was that final retest. So after all the retests were happened, or all the retests happened, now you start looking for sure entries. Now how could you look for your entries? Now for example, you could go to what you see, after the market has reached at this particular point, for example, price has reached at this particular point here, you're seeing this particular point, and it has started giving you some big drop of sales, and you see it reacted to your area or your zone. You could start doing what? You could just go to a smaller time frame, for example 15 minutes time frame. So when you go to the 15 minutes time frame, just a minute, so you go to your 15 minutes time frame, and then now you look for your sharp entry, and then you'll. So the reason I was going for 15 minutes time frame is that you won't risk a lot of your stop loss will be small, so you won't be risking much. So let me show you now. This is the 15 minutes time frame. After the retest, you see the price immediately, or the price just retested at that area. You see price retested that area. So after retesting, see the price started to drop down. Where could you take your, where could you place, or where could you take your entry? There could the first phase of sales could come. You see, after price retesting and then started to drop, you could wait for the price to take this for confirmation. Wait for the price to take it out, and then you see after it was taken out, there was this candle that, first of all, it did a retest. There was a retest here. You see this candle here. So you could take a short position, and then you could now place your, start looking for sales at those particular area. And then where do you place your stop loss? Stop loss, of course, is above there where the price was. And then now your TP, you now target maybe a ratio of what? Try targeting a ratio of 4, a ratio of 4, or a ratio of 5 in your trade. So for example, that ratio of 4 is given out. Let's see. So that's how you could get a very good sniping entry with that. Combining some few technical analysis, and also checking out on your on your standard error band. So the standard error band, so looking at the bands, so the bands gave us some clue also about the market, because number one, you see the bands did what? The bands were facing down. So the bands pointing like this means there's a lot of sell momentum. So that is the advantage of having your bands on your strategy, having those the smoothing the standard error bands on your charts. It helps you to show you the momentum, and also it gives you the channel of which the price is following. So like this one, we had the sell channel there. So the standard error bands gave us a clue of the market, and then combining with the technical analysis, that's how the strategy becomes powerful. So I hope you guys maybe have understood a point or two in that video, but I'll keep making more videos of it so that you guys keep understanding. I have I have a lot to teach, but I cannot put in one video. I'll put them on several videos so that you guys will just be following up one by one. I'm going to post this on my YouTube channel. I also have a Telegram channel, guys. You can you can join my Telegram channel with the link that I'll be attaching on the video, guys. So I thank you guys for going through the video and watching. We'll see you in the next video. Otherwise, bye for now, and bye bye.